In the last lesson on insurance, we looked at the principles of insurance. So just to bear them in mind again, the 5 rules or principles are when taking out insurance that the person looking to take out insurance would have to make sure when filling out forms or talking on the phone, they give all their details and they tell the truth. So utmost good faith, okay? Because when they go to claim, it's pointless not telling the truth because they wouldn't get any compensation. Also, then they should have an insurable interest, so they suffer from its loss and gain from the existence of the asset. So they can't insure their neighbour's house or car, for example. Indemnity means that they cannot profit from insurance. So if they're insured by 2 insurance companies, then contribution would have to kick in there where both companies would contribute half. Subrogation, think about the insurance company becoming the sub or taking legal ownership of the asset, the car, for instance, where they can go then and sue the third party. So calculating premium then. When it comes to looking at risk, okay, so premiums are all based around risk. So the first thing the insurance company will do is they'll look at how likely the event could take place. For instance, a flood, if you live in a house near a river and you're more susceptible to floods, then obviously there's a higher risk and they probably wouldn't even insure you. Okay, so the more riskier it is, then the higher the premium. And an actuary works for the insurance company and they'll work out the price that you'd have to pay. Okay, so based on all the details you give. So loadings will be calculated. So, depending on what risk factors that would increase the price. So that'd be added to your basic premium. So depending on the person, then they'd have different loadings. So your age would be a factor when it comes to life or health insurance. Obviously then, because the older you are, the more susceptible you are to health conditions. So examples of loadings then, people over 34, as I said, would have a higher premium for health insurance, and people who live in the city for home insurance, drivers for if they have a provisional license because they're not as experienced, or car insurance premiums would be higher. People who drive expensive cars because the insurance company would have to pay out more because it's more valuable, and people who work in dangerous jobs. Again, when it comes to risks through their life and health, people with existing health problems. Okay, so if you're traveling and you have a health condition, you could be at risk of maybe getting a blood clot due to flights because there's more of a risk of that traveling. So on the other hand, then there would be also discounts. So the insurance company would give special discounts to people who have a lower risk involved. So, and again, it's to try and encourage those people to buy their insurance from them because they're less likely to claim. So you get, for instance, a 3% discount if you have a burglar alarm, okay, on your house or car. If a driver, okay, hasn't had any accidents, never claimed, okay, they'd be given what's called a no claims bonus. All right, so rewarded for that. So it's a document, every year it adds up. So 1, 2, 3, 4, 5 years, no claims bonus. And it's quite a high percentage then. You could get 50% off your insurance premiums. Okay. And a lot of people protect those no claims bonuses. So they'll take out a higher premium just to make sure maybe if they have to claim for, a scratch on their car, that they won't lose their no claims bonus for something so little. Okay, and reducing risk then. So a lot of people can reduce the risk for different insurances. So we'll look at some examples. So to reduce risk when it comes to life insurance and health insurance premiums, so obviously keep healthy and don't smoke. All right. So when it comes to life insurance, if you smoke, there'd be a very high percentage then added to that as a loading. Reduce your risk when it comes to car insurance. So be, no claims, be a careful driver and put in alarms and immobilizers in case somebody tries to steal the car. Maybe, parking in a garage, just be less risky of theft. So to lower home insurance premiums then install all different sorts of alarms between smoke and, burglar alarms, carbon monoxide detectors. Okay. Uninsurable risks then. So some people are just not insurable. Too high when it comes to risk. As I said to you, maybe if you live near a river and your house is liable for flooding. Calculating the premium then, so the actuary, like I said, in the insurance company, that person would, to figure out your total premium, they'd have a basic for most people, then they'll add on loadings for any risk, and they'll take away discounts if you're less, for different things that you're less risky. For example, then how to calculate that. The loadings are calculated based on the basic premium first, and then to get the discount, that would be the basic plus the loadings. Okay, so they get a percentage of that figure, and then to get your no claims bonus, it's at the very end. Then you get maybe 50% off your total premium, which will be where you have your basic plus the loadings minus the discounts. So it comes in at the end. Making a claim then, a person who suffers a loss then would call their insurance company, fill out any forms, and the form would ask questions about their details, personal details, the loss, where and how it took place, the value being claimed for. Okay, and then calculating that, the average clause will come into place if, depending on if you've underinsured maybe. So some people might have a house value, the value or the market value is 300,000 in this example, but they only insure for 200 to reduce their premium. Some people do that because the higher the value, obviously you pay more. So they've only insured it or underinsured it. Okay, so it's only 2/3 of the value. So if the house isn't fully damaged, or maybe it is, maybe they try and claim the 300,000, they'd only get obviously the 200,000, or maybe there's a loss of 10,000 and they'll only get again 2/3 of that 10,000. Okay, so there's the formula for that. So we looked at two formulas to get the premium. It's the basic plus loadings as a percentage of that, and then the discount would be a percentage of both of them, and then the no claims bonus would be taken away then or calculated at the end. Okay, and then making a claim, there's three things a person can get. So they can get cash compensation, replace the asset. We often mention about cars being wrote off. So if the car is just not possible to be able to drive it again, you get a new car. Or repair, so maybe it's just damaged, scratched, and you bring it to a breaker and they'll fix it. Okay, so either get money, a replacement, or a repair. Okay, and again, our principles, coming back to that then finally, so if there's two insurance companies involved, they will contribute or pay or share the cost. And then the insurance company then can go and get the money there out of pocket from the person who caused the damage. Okay, and that's subrogation. Think of a sub, they become sub for the person, contribute, and we had all the other principles to have a look at as well. Okay, so finish the questions at the end of the chapter.